Welcome to the Builders Cracks podcast, where we go deep on the issues and leave nothing uncovered. If you're a homeowner and you're thinking of building, or maybe you're currently building, check out our podcast on Spotify, YouTube, or you can follow Perth Building Shelter on Facebook. Today in the house, we have Logan Willetts from Diversify Finance. Whoa, I nailed it. I nailed it. And of course, as usual, we've got John, the amazing producer, back there. Say hi, John.
Hello.
From Eruption Video Creations. So awesome stuff. Hey, welcome to the podcast, Logan. How are we?
We're very good this morning, Deb. Thank you for having me along.
That's good. I have to say, I have to admit something. I suck at finance. I suck at anything to do with numbers. So today's podcast is really going to test me on a whole new level because I've got to sound smart. But these podcasts are all about asking the dumb questions and not being afraid to ask the dumb question. So if I ask a dumb question, you can just roll your eyes at me, have a little bit of a giggle, and we'll just casually move on. How's that?
I surely will do that too, Deb.
So tell me a little bit about yourself. So you've been a mortgage broker for a while now?
Yeah, I have been. I've been a mortgage broker for just on 5 years now, maybe just over actually. And before that, I was a chartered accountant. So I like to think I sort of know my numbers. So and it's been a busy 5 years. So it's been really good.
Yeah, well, last year would have been crazy, wouldn't it, with the grants?
Yeah, a little bit too much. It's been quite steady leading up to that point, and then the last financial year was, as you can tell, I've probably aged probably 5 years over that last echelon. So it was tough.
I think a lot of people have aged over the last year, especially. So, what are you currently seeing at the moment? So we've kind of petered off now with the grants. Everybody's got their grants and things like that. But we're also seeing all these price hikes and things like that. Are you seeing clients coming back to you?
We are seeing a little bit of price hikes. The builders have obviously got higher costs and everything in terms of what they're doing. Supply chains around the world are struggling to supply material. And then obviously you've seen the news with the bricklayers and everything, and their prices going up and everything, just simple supply and demand. So that's where it's at the moment. And in terms of that, I guess the builders are having to pass on those costs as well. So
yeah. And so for the homeowner that initially went out there, got a loan for a certain amount, are they now coming back to you wanting more or increase their loan or refinance or things like that?
I haven't had a lot of people come back to me in terms of that. So I don't know whether the ones that are getting increases, I don't know if they're going out and getting personal loans or something to cover them, or the builders are just using their grants or some of the grants when they come through.
Right.
But yeah, a lot of them have obviously just maybe borne the cost themselves in terms of additional savings they've had or something like that. So I haven't had a lot of feedback on that.
Okay, that's okay. And it's just handy to know because we get a lot of phone calls from homeowners that are experiencing the price hikes, which they didn't initially counter for. Yeah. And so it's just a curious question on my behalf whether or not you're seeing that or not. So because you're out there, you're at the coalface of the finances and things like that.
Yeah, correct.
The main reason I got you on today though was to talk about, I think we met connected a little over a year ago.
Yeah, I think that was right.
Yeah, and we were having a conversation about people going for finances, getting construction loans and things like that. And we got talking about the facets of where they're going wrong. Yep. And I think it's a really good idea to talk about these things, bring it to some sort of an awareness so that people are more prepared. So the hope is that we can get this micro content and people will just go to our Facebook page or go somewhere and just go, oh, I need to do that. So let's go from the beginning. If I was going for a home loan, I want to build a house, what's my first stop? Where do I go first?
I would say to first talk to a broker, or if you're talking to a builder, generally that's the first step, that they'll put you in touch with a broker, get all your pay slips, get your current debts and everything, and just see where you're at in terms of what you can afford. Because there's no point a builder showing you a $500,000 package if you can only afford a $330,000 package, for example. And so that's the first place we start, and also doing credit checks to make sure all their credit's looking good, which we've seen quite a few changes in that area at the moment in terms of what they call comprehensive credit reporting. Where the banks and myself, when we do a credit check, I can see, for example, the last 2 years of your payment history on your credit card now. So let's just say you bank.
Good thing I haven't got a credit card.
Yeah, I know. It's a tough thing for some clients because they do have checkered history sometimes with that, and that obviously brings your credit score down, and certain credit scores, some banks really focus on it. So if you've got a bad credit score, then it can leave you with limited options. Likewise, if you've got anything like defaults on your credit file and stuff as well, that power bill that you had when you were young that you ignored and everything like that can come back to bite you and stuff as well. I'm
going to make sure my kids listen to this podcast today. I should actually get my son to join in, who's been talking about thinking of building and or buying a house. So I said, you need to join me on this podcast. So that credit rating and those credit checks, what sort of things are they looking for other than defaults? Because I'm leading you into a question rather than just ask it.
Yep.
What sort of things are showing up?
They're looking into your total history. So your credit score, you could be the best person in the world, but that credit score, that piece of paper, is basically the bank's risk portfolio, I guess, or profile of you as a client.
Yep.
So there's so many things that go into it, and sometimes there's no rhyme or reason. I'll look at it and say, well, I'm not sure why the score's as low as it can be, or low as it is, because they're effectively looking at a few things. They're looking at one, what is your overall score? They can see your credit inquiries, so whether it's going for a new phone, you go for a car loan, you go for a credit card. If you're doing quite a few of these things in succession, in quick succession as well, that can really impact your score, because it kind of, I suppose from a bank's perspective, it looks like you're always looking to borrow money because you can't afford to buy these things yourself.
Oh, that's interesting.
That's my opinion on it anyway.
What about Uber Eats? Casino, Payway, is it Payway?
Oh, there's so many of those. Payway, Open Pay, is it Pay?
Are they looking at things like that? Because the younger generation, I won't give away my age here, but the younger generation have got that kind of want it now, have it now. Uber Eats is a big one. A lot of young people, especially also with the pandemic, everybody sort of turned to Uber Eats. But do they look at those sort of things, or is that a bit of a myth?
I think they do. It depends on the bank, and it depends on your overall spend. So when you're applying for a loan, you don't want to be overspending. You're not saving any money. You're spending every last dollar you have. You're not showing to me as a broker, for one, that you can afford it. Because I don't want to promote something to the bank and say, hey, can you approve my customer? And they've got a bad habit of spending, $500 a month on Uber Eats. They're going to change that habit. I can't just say that. It used to be that you could just say, look, they're going to change this and change this, but now the banks are more getting into a habit of saying, well, you said you change. How about you do that now before we approve you? So they don't want to see the overspend.
And you said 2 years. They're looking back.
No, so that's only on your comprehensive credit reporting. So that's not showing up. That won't show up any of your Uber Eats or anything. That's more the conduct on your bank statements.
Okay, all right. So see, this is where
we learn.
Oh, it's steep learning curve. This one, I can tell you. So so those younger people coming in, what about those people that haven't had the opportunity to get a credit rating?
That can be hard as well. I see a lot of people suggesting that you go and get a credit card and stuff like that. I don't know if I'm a firm believer in that.
Mm-hmm.
I'd look at the client's profile and look at if it was going to pass with a certain bank that they wanted to go to, and take it from there. It is hard. Some of the banks have quite a hard credit scoring system where it's effectively you're applying to a bank computer that can effectively computer decline.
Oh, really? So it's not even a person sitting back there looking at these things.
And so there's some banks that'll do that, not all. So if I see a scenario like that and I'm just like, well, it could potentially credit score decline, then I probably wouldn't take that client to that bank.
Okay.
So there's always a little bit of a method to the madness in terms of which lender you go to, because it's not a one lender fits all.
Okay.
Some clients have the ability to go to any bank at all. So they're what you call the vanilla clients or the cherry clients, because it's just like you've got full options basically.
Okay.
But I've seen some clients that I'd look at it and say, well, you've got a perfect profile and everything. You've got good savings and everything, but it has been credit score declined by a bank, which sometimes just absolutely baffles me. And especially when you're looking at it and saying, well, you've got a client that's showing all the right things and more than proving he can afford it or she can afford it, and then all of a sudden it's the decline.
Yeah, they were a little bit tougher last year, weren't they, with declining loans? I think, and correct me if I'm wrong, but people that took money out of their super and then were trying to buy a house or something like that, they were declined. Because the reason for that was because, hang on, how did it go? The reason for it was it came up as a help me out.
Yeah, you're trying to
save me.
I was just going to let you go on.
No, because I've gone mentally blank. I'm just gone mentally blank on it.
So basically, to claim that $10,000 out of your super, you needed to declare some sort of hardship. So you're sort of saying, "Hey, I'm in trouble, but I also want to buy a house right now. Will you lend me some money?" So that's where it got a little bit tricky with a lot of lenders and things like that as well. So
yeah, and those people, how long are they going to have to wait now before?
Look, to be honest,
it's just roll the dice, and
you don't really. I wouldn't say you really have to wait. I mean, that time has passed now. As long as you're proving that you can afford it. I mean, I think I saw on the news at one point that people were just taking it out for their deposits on the home loan, and it didn't really say it was a bad thing until they got to someone like myself, and then I was just like, I don't know what to do now because you're taking out your super.
There was a lot of new cars and speedboats happening, and wasn't there?
Jet skis, everything. I had a few clients that got some nice things out of it.
Yeah, there was a few, but I think the majority of people really did access that because of hardship.
Yeah. A lot of them, I had a lot of clients that would take it out and cleared up a whole lot of loans that they had for years. So they were using it for, I guess, the right purpose. Probably wasn't a good time to take money out of your super because you're effectively realising the losses that a lot of supers had in them. So but you got to do what you got to do, and
that's
some
it.
some people saw it as a great opportunity and took it. So
So between a mortgage broker and a bank lender, what are the key differences? Is there a difference? I know there is a difference. Trick question.
Yeah.
Hang on, let me check my answers. Yes.
So I guess it's just the point of the banks. Let's just say you walk into a bank branch tomorrow and you say, hey, this is what I want. That bank might not be able to help you. Or they may be able to help you, and they might offer you one of their variable rate products, one of their fixed rate products. But they're not going to say to you, hey, Deb, thanks so much for coming in. I'd love to help you today, but there's a better deal that you can get down the road. They're not going to send you down to the competitors. So I guess that's one of the differences. And I've been in a bank before, in the bank that I used to bank with. And I overheard the conversation because it's pretty open plan in the banks these days.
Yeah, they're very open, aren't they?
Yeah. And I heard the situation. I heard the client getting said, "Oh, sorry, you don't have 10% deposit," which they needed. That bank particular needed 10% deposit. So yeah, keep saving and come back to us when you're ready. Whereas I felt like saying, look, I can actually help you right now with less deposit, probably get you a better deal. But yeah,
Did you chase him down the shopping mall?
Yeah, I gave him a little dive tackle, and he's in his new home now. So no.
I bet you they're appreciative.
But yeah, I guess from a broker's perspective, we look at all of the options for you, and sometimes, as I said before, sometimes some people have all of the options, and you can go to any bank and get the best deal. But some banks don't like a client in particular. Because you might be, for example, in a casual job, and that particular lender that you go into might need longer term employment for that casual role. Whereas the next bank might look at it differently. Take a lot more income, allow you to borrow more. And yeah, there's so many different treatments of casual income, full-time, time in the job. If you're on probation or not on probation, some banks don't mind probation.
Yep.
And some banks won't approve it at all if you're on probation. So if you walked into the bank and one of those banks that didn't like probation and you were on probation, you're sort of left with thinking, well, I've got no options at the moment. So that's the tough aspect of it. Whereas I could have
you might have other options
straight away that would work.
Okay.
Provided they meet all the other criteria and they were fit, ready to go, then yeah, it can be the difference. So we can offer them a lot more options, I guess.
Okay, so there are different types of loans then?
Absolutely.
Yeah.
So you'll get clients, you'll get loans that, one, there's a variable loan, there's a basic variable loan, so that's a no frills sort of, doesn't come with offset accounts and everything like that.
Okay, so variable as in that interest rate fluctuates, is that correct?
Yep.
Yeah. I'm doing okay.
You are doing okay. You sound like you've done a little bit of research.
Well, I did have a loan at one stage, so I'm one of the fortunate people at the moment that have worked hard, did the right thing, and worked my guts out to be mortgage free at the moment.
Oh, well done.
So At the moment.
That's all right. We'll have your new house by the end of this, so don't worry.
What is it? They say the rich actually is just on borrowed money or something like that. So I think I'm not doing it smart.
So with a variable interest rate, the rate can change. It is variable. It's not like it changes daily. I mean, it could do, but it usually stays the same for a while, and it'll jump by a little bit, and then it might come down depending on what the Reserve Bank does overall, and also what the particular bank does in question. So some banks will change their variable rates a lot more than others, and no matter what the Reserve Bank is doing.
Okay.
So the Reserve Bank's lending the bank's money, and that's all at the same rate, so it doesn't matter whether some banks individually change their own rates as well. So variable rates can fluctuate. Sometimes for the better when it comes down, and sometimes it's worse.
Because things are low at the moment still.
Correct.
The rates are fairly low still. There's been a bit of talk whether they're going to go up or not. Are you going to have a guess whether they're going to? It's inevitable, isn't it? I mean, they have to.
At some point, they'll have to go back up again.
Yeah.
But there's so many factors that play into that interest rate increasing again. So I'm seeing a lot of people at the moment fix their loans. And another aspect is that a lot of people don't realise that you don't have to fix your whole loan. You can have a fixed and a variable component.
Okay, so you can...
Or you can have two fixed and two variable components if you wanted to split the loan up into 4 different parts for whatever reason.
Oh, really?
So,
that's something I didn't know. I knew you could split it half and half, but you can choose the percentage in which you...
Yeah, correct.
Yeah.
So if you've got a $300,000 loan, for example, you could say, well, let's split it into 2 and have 2 parts fixed or whatever it may be. There's varying reasons for that. With a fixed rate loan, most banks will restrict you on how much extra you can pay on a fixed rate loan. So if you fix it in for 3 years, majority of the banks will have roughly a 10 grand limit per year on extra. So that's over and above your normal payments. So that can be quite restrictive for some people, especially if they were with like a higher interest rate lender and then all of a sudden they refinance to a low fixed rate. They've got a bit of spare cash and some of them really want to dig into their mortgage. So it might not be worth restricting them to an extra 10 grand a year. You might want to split that fixed loan up into 2, which might allow them to be 10 grand per split. Each year, so it's an extra 20 grand basically a year. So not all lenders do it like that, but
but it can be done, and I think that's the important thing to remember here, that asking these questions of your mortgage broker or your lender to find out what actually can be done and really get that understanding of that. So there's also the factor of, you could put that money aside, couldn't you? If you fixed it, you could just have a separate bank account where you're paying that money into it, and then when it comes out of fix, you can, or is there restrictions around that as well?
Depending on the bank, again. Always depending
Go
on the bank.
Name and shame the banks. They're probably not listening to the podcast. You'll be okay.
That's true. A lot of people don't realise that you can actually have an offset account on fixed rates as well. There's certain banks that offer 100% offset on a fixed rate, which is not usually the done thing. There's only a handful of banks that do it. So an offset account's usually attached to a variable portion of a loan. So that's why a lot of people have variable rate loans with an offset account. So they effectively load up the offset account, which is kind of like your savings account as such, but it's very easily accessible. So you can throw as much money in there as you like, and then take it out as quickly as you like, but every day that you've got $1 in there, it's offsetting the dollar on your home loan. Basically. Okay,
so it's lowering the amount that you have to pay back, is that?
Correct, it's lowering the interest that you pay back. So if, for example, let's just say round numbers, you've got a $400,000 loan, you've got 50 grand sitting in your offset account, you're only going to pay interest on the 350, being on the 400 minus the 50.
See, this is where I think I made my biggest mistake. When I sold my other property, rather than, because I had an offset account, and I think what I should have done is whack all the money on into the offset and kept it open. Or is it better to just be done? You own it, you got it. No one can take it away from you as long as the laws don't change.
I suppose it really depends on what your goals are. So without knowing your full situation on everything, it's very hard to say, you should have done that differently.
I'm winning lotto tomorrow, so I think it's 20 mil still.
But I suppose if you were, let's just say, if you were looking to, let's just say, a couple of years off work, and you wanted to keep it open and have money in that offset account so you could use it, then that might have been a better option. Or if you'd bought a house and you were planning on doing some renovations and you didn't want to use every last dollar in your deposit and have to save up to do those renovations, do them now, you'd then keep that money aside, I guess. So
I'm not sure that I was totally smart with that. But do you know what? It is what it is now, and so,
you're mortgage free, you're smarter than most of us.
Well, I don't know that I'm smarter. It was a hard slog, and I guess I was fortunate because the property that I'm on, I was able to subdivide, and it created that opportunity. So when I first bought the property, it was only 150,000. So so buy smart as well. Don't just, when you're looking at properties or where you're going to build, look at, the infrastructure that's going to happen around in, a few years, and, look at those sort of things because it paid off. And look, I've been here 30 years, but that 30 years investment has finally paid off, and I got lucky. All right. So we've talked about how does finance work when building. We've covered, why do people struggle to obtain finance? It was kind of they're not really prepared properly, are they?
No, it's not. It's sometimes I'll see a client and they're ready to go, and I look at it and it's just like, wow, great work. And it depends on the level of like whether you're dealing with a first home buyer that only has a few $1,000s deposit, or you could be dealing with someone that's very wealthy, and they can face the same sort of adversity if they've got this, like if they've got things on their bank statements and stuff that don't quite look right, and they've got high credit card limits and everything. Sometimes there's always something that needs to be tweaked. Yeah. Not everyone has the perfect conduct on their bank statements and everything like that. Yeah. So I would say more it's just a prove to the bank before you get there. But it's always handy to have a chat with someone like myself, with a mortgage broker, and see where you're sitting at the moment.
Sort of come to you sort of 6 months beforehand and say, hey, we're thinking, or is that too far ahead? Or
I don't think any time is too far ahead, because the way I always look at it when I was an accountant, I was sort of fresh over in Australia, if you haven't picked up my Kiwi accent already.
Well,
so so I didn't really know the process of building a house or buying a house. You don't know how much you can afford. You don't know how much deposit you need. You don't know if someone's saying at work, oh, you need to get a credit profile, make sure you go and get a credit card, and then all of a sudden that can upset the rest of there's so many different facets that can come into play. So I would say it's always good to have that initial chat. And having a chat with me, it's not like you're signing up for anything. It's just...
It's a free consultation, isn't it? So you can have a chat, find out where you're sitting, find out what you're doing before you go and see the display homes. Because when you see the display homes, you want everything. Yeah, that's what I find. Yeah. So, before you go to those display homes, tell me about Keystart. Okay, because Keystart, is that structured differently? We get a lot of phone calls from people that have gone through Keystart. Is that a whole different ball game?
It is, yeah.
Is it another podcast?
No. It's I can cover it off pretty quickly.
Good, because I do need this, because a lot of, as I said, a lot of homeowners do call us, and I'm like, here's a phone number, ring Logan. He'll sort you out, but it's handy for me to know.
Yeah. So Keystart's basically a WA government set up organisation to help first home buyers and second home buyers, whether it's building or purchasing an established home, get into a home for a very low deposit. So most of the time it's 2%, and that can be, so if you're building, probably what a lot of people don't understand is if you buy an established home at the moment, there's no first homeowners grant. You don't receive the $10,000 if you're buying an established home that's not brand new. Oh,
okay. It used to be that you
used to get a bit, and then it dropped down to about $7,000-ish, $7,500, and then it dropped again, and then it just went.
Okay.
So the first homeowners grant, the $10,000, specifically speaking in WA here, that's $10,000, which can be used towards your first home, depending on the lender. Yeah. Specifically, Keystart will use it as part of your funds to complete, as part of those 2%. So if for example, you purchase a $400,000 house, you pay roughly $4,000 deposit. That's you done. That's all you need to pay, provided you meet the lending criteria and you can borrow that $400,000. Then.
And Keystart's also different in terms of they expect you to have the finishings in your home too, don't they? Yeah. That's one of their criteria is you've got to have floor coverings, window treatments, is it?
Yeah. Yeah. So there's a few of the criteria that Keystart that might be slightly different to a bank. So they basically want a finished product. So they obviously realise that you're going in there with a low deposit. So they don't want a house that needs a whole lot of work, because at the end of the day, if the client can't pay, Keystart's left holding the baby as such.
Yep.
So they have to repossess the house. If it went completely pear-shaped after a long time, you couldn't come out of hardship. Then they'd take it back, and then have to sell the house. And if it's an unfinished house, then they're obviously not going to get as much money for it to clear the loan and everything off.
Yeah, and we were talking about this on another podcast a couple of weeks ago that I can't even remember who it was with now. But we were talking about the banks. Oh, it was with Reg. The banks are driving a little bit of the homeowners getting everything, getting their floor coverings, getting their window treatments, because I was saying, why can't they do what we did and put newspaper up on the windows for a little while? And, why does everybody need everything right now? But the banks are generating that a little bit.
Correct. Yeah.
Aren't they?
Yeah. And they want to see funds that you've got. If it's not finished, they want to see that you've got some money left over sometimes. Again, bank specific. I've got one bank that always makes us have internal wall painting. Okay. Which internal wall painting isn't generally included in a house.
Well, it's an option.
Package.
It's Correct. Something the homeowner can take out, isn't it?
But this particular bank requires it, so you have to add it in to the contract. So.
All right. And this is something else we get asked a lot. Can I get my loan, build with a builder, but I want to do my floor coverings outside of the package, so I want to go out and outsource my flooring because it's going to be cheaper for me to do that. Yep. Can it be done? I tread into this very carefully because I did it, but I don't know that it's something that they prefer not to, don't they?
They do prefer not to because, so again, it's lender specific. So some of the banks will allow you to provide your own quotes. So you'll have your building contract with everything in it, and then you'll have, a few additions from different quotes from different people. And so they'll provide the money for you to go and do those things. But it can be tricky for the builder because they want to hand over a finished product, and then they have a contractor coming in to do the flooring who then goes and scratches the walls or might cause some damage accidentally. And then all of a sudden the builder's saying, well, that's your contractor that you got in that did that. And it can be a bit of a, well, no, it's not from that. And it becomes a bit of a he said, she said. And then I suppose you've got warranty issues down the track if someone else is doing some part of the house and they're trying to blame the builder or the builder's trying to blame them. So insurance-wise, it can be difficult as well because they've got to get other people in. And those, let's just say, for example, you get someone in to do all the flooring. What happens at the point where that flooring guy that you get comes in and he's busy for the next month, and then all of a sudden the builder can't hand over the house. Yeah,
I think the general rule is, I think the general rule is that if you're going to do it, you have to do handover before you can get that work done.
Yeah, generally.
As general rule, but
some of the builders will let you in to do it.
Yeah, so it just blurs the line. Stick with the builder. It's probably easier. But I know that there's like the bank wouldn't release the money either. It was held in a holding, and there was all this proof that it was actually a bit of a painful process to go through. So it's not something that I personally recommend. So. What are some of the top things that you would tell a homeowner if anything, like if they're coming to you, well, we've already covered, come as soon as possible.
Yep.
Clean up your credit. Clean up your life. Bank statements and that. We don't want to see a whole pile of Uber Eats and casino dates and things like that.
I'd probably say... one is that your bank's not always going to give you the best deal. So talk to a broker.
Yep.
So some people think because they've been with a certain bank for X amount of years that
there's that loyalty, isn't there?
Yeah. And people get the wrong opinion and think because they've got maybe $400,000 loan with them already, or 20 grand sitting in the bank account, that bank's going to completely look after them. but you're a small drop in the ocean, basically. So that's not always the case, and it can sometimes be a bad thing because that bank can see everything you do and spend your money on. So
and hide it with the broker.
If you're if you're having a bit of a punt every now and then, they might see it as a problem. See that you could be a potential problem gambler, and they might not want to lend to you. So,
is it a myth that it costs more to go to a broker?
Probably depends.
Ooh.
I know some brokers charge a fee. I don't personally charge a fee at this stage. I haven't charged a fee.
So ask up front, do you charge a fee would be the solution there.
Probably the easiest one. Yeah, just to ask. We're required to disclose fees if we do charge fees. Sometimes I'll charge a fee. For example, if I did all the work on a client and I'd tell them up front, obviously, that there's a fee payable if I go through all this process and for whatever reason you change your mind, because generally I'd get paid a commission by the bank.
Okay.
So if we did all the work and went through the whole process and then you were like, oh, Logan, I've changed my mind, I don't want to do this anymore, then it's kind of like, well, you've done all that work. It's it's not my fault that you've changed your mind, so that sometimes I can charge a fee there. But generally it doesn't cost you anymore. We just get paid a commission by the bank because effectively they don't have to have a staff member sitting in the bank selling their product.
Okay.
So that's
how it works.
It's probably a cheaper way for them to outsource, is to pay someone based on getting a job done rather than having someone sitting in their branch or someone on their payroll that they have to pay super and everything too. So but it can be tough on the flip side of that because we're a broker on commission, so we only get paid if we're getting deals done. So
go see the brokers. Go look after the brokers. Well, I think we've pretty much covered most of it. Was there anything that you wanted to add to that I've missed? Because you know the game better than I. Yeah. I've got a few myth busters, but if I've missed something, I'd love you to.
I suppose just in terms of like a lot of people have the opinion because they pay rent, I should be able to get a mortgage, which it doesn't always work out like that. Yes, you might be able to afford to pay your rent and everything, but it doesn't always work in a borrowing capacity because the banks allow for the home loan payment, but they also allow a buffer on that for an increase in interest rates.
Okay.
Circles back probably to the main thing is to see a broker and run your situation past them to see how much you can afford before you go shopping and either get disappointed or and don't always spend your maximum amount.
No.
People are just like, how much can I borrow? What's the maximum? I'm just like, well, the thing is you still want to be able to have a beer and a pizza on a Friday night and not be having 2-minute noodles most days of the week. So
it's a massive commitment, and I think a lot of people don't think the long-term game. And it was really interesting. I had a client a few weeks ago now, and she rang and she was really quite overwhelmed. She was stressed to the max, and she was like, they were looking at a $680,000 home. And when she went through the process of understanding why they were building, what they wanted, they eventually rang me the next day and they said, we've actually pulled out of the loan, which the mortgage broker and the builder probably didn't like me very much. But for me, it meant that the homeowner was not locking themselves, because it worked out that they were looking at starting a family. The husband in a year's time was going to stop working. And these were all the things that they hadn't considered. So a bit of a coaching session around that made them sort of look at it differently. And they end up buying an established home, and they're very, very happy in the area that they wanted. Yep. And, happy days. So, oops. I don't think it was one of your clients. No, it wasn't one of
where that client got to.
It wasn't one of your clients.
I seen you for
I don't think so anyway. No, it wasn't one of yours. So anything else? The rent one was a great one. Was there anything else?
Just be very mindful of what you're spending your money on, and rather than saying you can afford it, prove you can afford it with saving some money right now, because not only will it prove to the bank that you can afford it, but it also proves to yourself that you can afford it without absolutely, as I say, if you can't have a beer and a pizza on a Friday night, or you always want to go to your expensive gym or whatever it may be, you want to be very mindful that you can still live your lifestyle.
Yeah, because that's when the pressures get too much, don't they? And then you're just working for
a roof over your head.
Yeah,
which I mean most of us do, but you just got to be careful that you're not overestimating what you can do.
Yeah, and this is where I would love to see, again, the younger generation sort of looking at, rather than going, oh, we're going to have the 4x2 now, let's start with a 2x, or a 3x1, and, that's our starting point, and we build that asset up and that sort of thing. So, use it, for collateral to then build more. Yep. But we've kind of lost that skill set, haven't we? We're not seeing it. And it's a bit of a shame.
You need to remember that it's your first house, I guess, and not your last. Because, a lot of people will want the best now, because I think that's what we're used to, is we're getting the best now rather than, especially with all your lenders and stuff that'll, allow you to take something now and then pay it off. It's, we're used to getting the best now, but we need to work to...
You saw my car when you drove in, didn't you? Yeah, I can tell you it's not the best now. Hidden Emu 2 years ago, it's still got a dented bonnet, but, eventually. And I think it's personal, people, how they carry their stress and the personal risk. So some people are real risk takers, whereas I'm like, I've had years of struggle. I don't want to do that anymore. I want to, well, not that I drink beer and not that I do eat pizza occasionally, but it's wanting to live that lifestyle.
I should have changed that example, shouldn't I?
Yeah, I don't know. What could we change it to? I have to think about that. I'd like to get my gardens done. Did you notice the weeds as you pulled up? But I do enjoy going out. I enjoy going out with my friends, but it is lifestyle now for me. Yeah. But I've done the hard yards, and I think that if young people dig in, do the hard yards, and be conscious of their spending and don't overspend on their home, and that includes the products that they're putting in it.
Correct.
So, sit with the little TV for a while, or...
because that can also hurt the valuation, which we didn't really touch on too much with this, the valuation side of a property as well. Like if someone goes, like when a valuer values the house, they're looking at what's sold in the area in the last 6 months. So if you're building a 3x2 and you've upgraded absolutely everything, yes, you're probably going to have the nicest house on the block. Is it going to translate to value in terms of what you're paying for it and everything? And when you go to sell or refinance, you might find that house is not worth what you paid for it because you've overcapitalised getting every last thing done in the house. So well, seeing you brought valuations up, I'm going to rip that and I'm going to throw that grenade. Next year, what do you think's what's your forecast for next year with the valuations? So we saw valuations, they were high? Yeah.
This year or last year with the grants. What would your forecast be?
That's $1 million question and a very crystal ball question. So it's going to depend on what really happens with the world when it opens up again, because there are going to be a whole lot of people that flee WA and go back across the world, and then obviously they don't need houses to live in, so is it going to free up the supply there? Or are we going to see a lot of people come and fly in to WA because it's been pretty much a safe haven? We've been pretty lucky over here in terms of a lot of other places around the world, so it's probably going to depend on that among a lot of other things in terms of where the economy's sitting and everything. So I'll give you that. That I wouldn't have a clue answer. It's going to be
another podcast, maybe.
But I suppose it really depends on what's going to happen in the future.
Yeah, I guess I worry about all those people that signed up for the grants, and next year they're going to go, well, hang on a minute. that grant money and the valuations are something's not matching up. So I reckon prediction about March next year we'll see that fallout.
I think we were starting to see, before coronavirus came, we were starting to see a bit of an increase in Perth market anyway, because Perth's been very low for some time. So I think we were just about due for an increase. So.
Yeah.
But yeah, as I say, it's...
Well, established homes are doing well. I mean, there are none. People can't buy them.
Correct.
They can't get that. I know Woodvale. I literally missed out by a couple months. I was at breaking point. I had to do something about my house next door. And I was like, I couldn't hold on anymore. I'd put tenants in, and literally a couple months later, it just up it went. I was like,
It's always the case.
It's always the case. All right, a few myth busters. Okay. It doesn't matter if you pay your loan monthly or fortnightly. Does it matter?
Depends.
Oh, okay.
I love this. So don't really answer any question. Just give a broad answer that doesn't make sense.
Ever thought of going into politics?
It does generally. A lot of banks, if you're paying weekly or fortnightly, they'll take the monthly figure and, for example, weekly, they'll divide that by 4. So, and on average across a year, you'd have 4.33 weeks in a month. So if they
you just did maths, that hurt my head.
Yeah, I saw that. I saw you wincing. Like, what are you talking about? But yeah, that then means that you're paying off a bit more every time you make a payment. So if you do pay weekly or fortnightly with a lot of the banks, you will pay your loan off faster because you're paying more of a payment throughout the year, and over the years you might save years off your mortgage by paying it weekly or fortnightly.
Okay.
But it does depend on the bank there as well.
It does depend on these banks. I don't know. Maybe I need to get some bankers in here. Okay. I love this one. Having a credit card with a high limit but low amount owing looks good to the bank.
I wouldn't say so. I mean, it's good to not be over the limit because I do see that a few times. People spend more than their credit card limit. The problem with that now is the banks used to look at it and say, well, you've paid your credit card on time for the last 3 months. We won't include it in your application. But now they treat it as if you've spent every dollar of that credit limit. Right. So, and it's usually roughly off the top of my head, it's about 3.8%. They'll look at that credit card. So on a $10,000 credit card, that could be a $380 a month commitment, which could really hurt your borrowing power. So if you wanted to borrow a lot more and you had a 10 grand credit card, but you only owed nothing on it all the time, or you paid a bit, it might be worth reducing the limit or closing the card. But again, it depends for everyone's individual circumstances. So talk to your broker before. You don't need to, before you talk to them, you don't need to close it or anything like that. It's one of those discussion points where you say, well, this is how much you could borrow at your current situation with your credit card. If you wanted to lower that credit card to this is how much you could borrow. If you want to close it completely, then it can adjust it like that if they wanted to borrow a bit more.
Okay then. All right. So good to think about. Lender's mortgage insurance will protect you if you default on your loan.
No. Lender's mortgage insurance. So any time that you don't have 20% deposit, for a majority of the cases, sometimes it's 15% deposit with a few lenders, they'll charge you mortgage insurance or lender's mortgage insurance. So lender's mortgage insurance protects the banks from you not paying. Okay. But you pay the insurance.
Okay, so it doesn't protect you. Banks don't like lending to single people.
Sometimes can be true. Yeah, and it's speculation as well in terms of what we see. So a young male FIFO worker, for example, I've seen a few declines where I've thought this is a pretty good deal, but certain banks probably have certain appetites for certain lending, and likewise when they've had too much lending, in a particular area, they've restricted postcodes because they've got too much exposure in that particular area. So they'll restrict lending and stuff as well. So,
wow.
So without discriminating against anyone, they'll do it indirectly to say, well, yeah, that deal doesn't quite fit our criteria and it'll computer score decline.
I'm gonna have to get one of these computers in to talk to me.
yeah, exactly. So with that, there's ways to build your profile as for example, if you were a young FIFO worker, then there's ways to build your profile as well to make it look better for the banks as well too.
What are some of those things to help you build the profile?
Oh, I don't want to tell every last secret I have because what the other brokers listening, and then
I see.
So there's other ways we look at doing things.
The secret's safe with me. You can tell me after we turn the cameras off.
And then there's some banks I just wouldn't take that deal to.
Make sure you give me the list of those when you leave too.
I will, for sure.
No, I send everyone your way anyway. So, last one, I need 20% deposit.
No, that's
a myth.
That's another myth
busted.
So you mentioned at the start, Key Start. So
yes.
They start at 2%. Which is effectively probably 1% if you're building with the first homeowners grant. Then you've got a few banks left, not many, that do 5% deposit. So not many in construction at all. If you're building, they'll do 5%.
Okay.
You've got the first home loan deposit scheme at the moment, which is a government incentive where if you're an Australian citizen, you earn a certain amount of money. A couple of other criteria. If you meet their criteria, then they effectively go guarantor for you. The government do.
Okay.
So you can avoid paying lenders' mortgage insurance altogether with a 5% deposit.
Okay.
So we're seeing a lot of that lately for those building. They do have ones for established homes as well. So ask your broker about those. And then majority of the banks will sit at about 8% deposit. Obviously, you have to pay the mortgage insurance in most cases, unless you're on that first home loan deposit scheme. But you can obviously there's a heap of options that you can get in under 20%.
Yeah. And
I always look at it in terms of the aspect, like I'll have some people that have 10% deposit and they'll say, look, we want to save until we get 10%, another 10%, so we don't have to pay mortgage insurance. Whereas mortgage insurance might be 10 grand on that deal, for example, which gets capitalised on top of the loan.
Yep.
So I look at it and say, well, are you going to pay rent for the next 3 years while you save that extra 10%? Think about the cost of that mortgage insurance, that 10 grand mortgage insurance, overpaying rent for 3 years. What do you think's better to do? So they should probably...
Did they glaze over?
Yeah, sometimes. like that look you just gave me.
Yeah, like that look I just gave you, because I've got a bit... I was like, that's another one that hurt my head. I'm a visual person, so I need to see things written down. I think when I have someone writing it down for me.
So there is a ton of different ways that you can look at it, and it's about weighing up those things like, do I just pay the 10 grand mortgage insurance? Or do I pay 26 grand rent for the next 3 years before I get into my home?
So it's probably better to do the mortgage insurance?
Correct, sometimes. Not always the case. Again, it depends on the client's circumstances and everything. But generally it can be better off paying the mortgage insurance, getting into the home now. If property prices keep increasing, then you may have missed out on that property at 500 grand that might be in 600 grand in the future.
Yeah.
Likewise, it could go the other way. We never know.
We don't know. It's Pandora's box. I was seeing on the news the other day, they were talking that it's going to be 3 years before you can start building a house. So, or there's a three-year wait or something like that. So
I had a bit of a laugh at that. I spoke to one of the builders, and they said on that front, one of their absolute worst scenarios was 16 months, and that's from the time you even start talking to a finance broker, so that's not even the build. So I think, now this is just me speaking from what I've seen, I think majority of the places are taking anywhere between sort of 8 months to a year-ish
Yeah.
Again, it just depends on the builder.
Yeah.
And I think that, I didn't read that article, but from memory, when someone mentioned it to me, I think it was talking more about 2-storied homes as well.
Okay. Yeah.
But
There is the trade shortages, there is stuff happening, but the industry needs to keep building, and a lot of probably the bigger builders or the ones that are foresight thinkers would have planned for this.
Yep.
And it was an interesting article when I read it, and I was like, oh, well, there you go. You've got people that are going out there and they've got 3 years to clean up their bank statements, stop eating Uber Eats. I shouldn't focus in on the Uber Eats, should I? But yeah, the key takeouts is go and see a mortgage broker as soon as you start thinking about potentially building or buying.
Yep.
Gives you an opportunity to clean up and have a look what your borrowing power is, as well as, you know, where you can improve the chances of that approval going through. Sets your budget so you can start getting out and looking at the homes that are within the budget. So it's something that I haven't touched on in any of the podcasts yet, is a lot of homeowners don't realise that each builder has their range according to budget as well. But that is another podcast.
Another podcast.
Logan, it's been such a pleasure having you on. So Logan from Diversify Finance.
Yeah.
I practiced that a lot. It's been an absolute pleasure, and I'm glad we eventually got to do it. COVID got in the way and our time schedules got in the way, but you got here in the end, and it's been an absolute pleasure to have you on. So thank you.
Thanks so much for having me, Deb. Much appreciated.
Thank you.
The information and opinions presented in this podcast are for general information only, and any reliance on it should not be without seeking professional advice. Perth Building Shelter does not endorse, approve, recommend or certify any information, product, process, service or organisation presented or mentioned in this podcast unless stated otherwise. Perth Building Shelter disclaims all liability for any loss arising out of any individual's use of or reliance on the information presented in the podcast.